Today we have with us Manish, Sequent Managing Director, Sharath, Joint Managing Director, and Tushar, CFO, to share the highlights of the business and financials for the quarter. I hope you've gone through our results release and the quarterly investor presentation, which have been uploaded on our website as well as stock exchange website. The transcript of this call will be available in a week's time on the company's website. Please note that today's discussion may be forward-looking in nature and must be viewed in relation to the risks pertaining to our business. After the end of this call, in case you have any further questions, please feel free to reach out to the investor relations team. I now hand over the call to Manish to make the opening comments. Over to you, Manish.
Thank you, Abhishek. Good morning and a very warm welcome to all of you who have joined this call. Joining me today on this call are Sharath Narsapur, our Joint Managing Director, and Tushar Mistry, our CFO. It has been almost 4.5 months since the world went into various lockdown modes, and if the indications are anything to go by, this is likely to continue in the foreseeable future. I do hope that you and your families are keeping well and adopting all safety measures as we get into potentially the more difficult phase as the lockdown eases and the economy opens up, leading to a spurt in cases. At our end as well, recently some of our employees at Mahat tested positive in the RT-PCR testing as part of mass testing undertaken in the area at the behest of the district collector, under which all employees across all plants in the area got tested. Even though most of the cases were asymptomatic, we temporarily stopped production while continuing other operations and also undertook deep disinfection of all the areas in the factory premises. These actions were in addition to the everyday disinfection, screening of employees for body temperature and oxygen levels, as well as social distancing in common areas, which has been in practice since the onset of pandemic in March 2020. The production will restart shortly, and we do not expect any material impact of this on our performance for the quarter or rest of the year. These are indeed challenging times, and we function in an essential industry where demand is consistent. This has allowed us to operate our plants, albeit with significant operational challenges. I would like to use this opportunity to place on record my sincere appreciation of the efforts of all our employees, as well as our leadership teams across the globe for a near flawless execution in a very difficult and challenging operating environment. I will briefly touch upon the performance for the quarter, and then we can throw open the floor for a Q&A session. Now coming to the quarter performance, for the quarter ended June 30th, we have clocked revenues of a little over 310 crores, 11.5% increase over corresponding period last year. The growth was primarily led by another consistent performance from APIs, which grew at 13.5%, while formulations came in at about 8.5% on a constant currency basis. This comes again under the backdrop of a very nervous business environment as well as operational challenges, and the team has showed great courage and flexibility to adapt to the new normal and deliver a near normal performance. If I had to analyze formulations, you would observe that we have had good growth across Latin, Europe and Turkey. However, as I had alluded in the earlier call, we stay cautious in emerging markets, leading to a decline of 43% during the quarter, partly tempering the growth of the formulations business. Adjusting for this, our growth in the rest of the formulation business is actually upwards of 20%. However, as I have always mentioned, the strength of our business model is in its diversified portfolio mix, which ensures resilience to such challenges. Going forward, we expect the growth in the emerging markets to return, and we expect to finish the year on a strong note. This will also be facilitated by our recent commercialization from 1st July of a multi-year agreement with Zoetis India to market and distribute their ruminant portfolio in the country. This portfolio of 13 brands spanning about 19 SKUs covers the therapeutic areas of antibiotics, parasiticides, hormones, as well as vaccines, and includes both some vintage brands of over 25 years of existence as well as some of their global brands. This addition effectively doubles our presence in India. It doubles our presence in India's ruminant business. API, as discussed earlier, turned in another strong performance with a growth of 21.5% on reported basis and 13.4% on a constant currency basis. Our focus in API business continues to be on the regulated markets, and the recent global development in the space augurs well for us in the medium to long-term basis. In keeping with the increasing demand, we have initiated expansion at our Vizag facility, which should facilitate our growth from FY22 and beyond. We envisage a total investment of about 50 crores spread over 18 months in this regard. Also, as mentioned in the last call, we have deferred our expansion plan at the Bremer facility in Germany for the time being due to execution challenges, because that requires multi-country execution, especially with project management crew coming from India as well as Italy. Coming to financials, our EBITDA margins for the quarter have improved 290 basis points and now stand at 16.8%. This has translated into a highest ever EBITDA at 52.1 crores for the quarter in a generally weak quarter, which gives us a sound start in a new financial year of a very unpredictable environment. The net profit for the quarter was higher by over 80% at 21 crores. We as a company place equal if not higher emphasis on our balance sheet and balance sheet ratios, with both ROCs and net debt to EBITDA moving in the right direction now over 13 quarters consistently. We draw great comfort in generating over 40 crores cash flows from operations for the quarter, leading to a significant reduction in our net debt levels since the last quarter. I am sure you would have also seen our update on the progress on Carlyle transaction. The transaction is expected to conclude within the current quarter. To conclude, our focus during the pandemic has been to keep the business functioning, while at the same time empathizing with all our stakeholders. While placing employee safety as the top priority, we have also ensured that our bankers, but more importantly our vendors and other partners in this journey, are paid in time. We now look at the rest of the year with far more confidence compared to where we started the year. With these words, I now throw open the floor for Q&A. Over to you, Abhishek.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Cinderella Carvalho from Centrum. Please go ahead.
Thanks for the question and congratulations on good set of numbers. So just wanted to understand from you, how are we looking at the formulation emerging market business? You indicated that how is it from June onwards, have we seen some recovery there, or what is the current status?
Yeah. So, Cinderella, I'll break our emerging market business into 2 buckets. One is India, and the second is, of course, the other emerging markets that we operate in. Both these markets were down in the last quarter and for last some time, and our concern largely has been around collections rather than revenues. So that's why we have been going slow. Having said that, with oil prices moving up and the dollar being stable now, the other emerging markets have stabilized, and we already see a traction in business. Even in India, there has been an improvement in the business environment starting from June, and that has really picked up in July. further facilitated by our recent Zoetis commercialization of portfolio in India, we are very confident of this part of business being back on growth track for the rest of the year.
So any color of the Zoetis, how it will help us and what is the strategy over there?
So this Zoetis portfolio is largely their vintage brands which have been in existence. These are old Pfizer brands which have been in existence in India for over 25 years, as well as some of their global brands, including vaccines. Now, clearly, there is a strong element of pull in these products, and what we are likely to achieve out of this is not only kind of enhances our presence with the doctor base, but more importantly, it will also help facilitate some of our own business practices. So what we foresee out of this is our own debtors and all in India business will come down because of the very high pull that the Zoetis portfolio commands in the marketplace.
And so any color on the API side, how is the pricing environment? Are we seeing some price inflation there, and any view in terms of the sustainability of that?
Sorry, I didn't hear the last part clearly. Can you come again?
Sustainability of the pricing environment on the API side, sir.
Yeah. So, see, you have to bear in mind that our strategy is in and around regulated markets and regulated customers. And being in animal health, the end product pricing does not really change. So, see, we are not in human pharma wherein shortages lead to spike in prices and whatnot. It's a very commercial industry with stable prices. So, for us, we are not seeing any benefit, short-term benefit of the price changes that are happening in the industry. Nor are we wanting to go that route, because ours is a long-term sustainable business model with regulated customers who do not like price changes on an order-to-order basis. So, having said that, the recent global dynamics or geopolitics that are emerging clearly reflects to a long-term good times for API business, maybe between 3 to 5 years. So, I mean, I see a definitive improvement in the way API businesses are looked going forward for a sustainable period of time.
That's helpful, sir. And just a final take, like how should we see?
Ma'am, may we request
Sure,
you to
don't
ask
mind.
the question, please?
Yeah, okay.
Thank you. The next question is from the line of Varun Goenka from Nippon Mutual Fund. Please go ahead.
Yes, good morning, sir, and congratulations for a good set of numbers. I think it's been a few quarters since we've been showing consistent improvement. My question is regarding the Zoetis agreement. If you can just help us understand what's in it for us, how did this agreement really come to be? I mean, exactly what is the strength that we are bringing to the table? And what is the demand opportunity in India for these products that you are going to market? Maybe the whole, if you can help us understand the end-to-end market opportunity, it will be giving us a good sense.
Yeah. So obviously, I cannot disclose too much details about it given the confidentiality reasons. Some of the color around the arrangement I have already shared in the previous question by Cinderella. So anything more specific will be difficult, but having said that, as I said, this kind of doubles our presence in the ruminant business in India. And while Zoetis also benefits from it because they are not having their own field force to market these products, we are also going to benefit not only from incremental profitability out of this portfolio, but more importantly, improving our own hygiene of business as well, leveraging these long-standing vintage nature of these brands.
Okay. And what would be the probable India demand opportunity or addressable opportunity for us as such?
So we expect between 25 to 30 crores of incremental sales out of these products in the current year, which is about 9 months of operations.
Okay, and that would be what market share in approximate?
I think you have to bear in mind that animal health does not have this kind of data.
Yes.
Yeah. So if you are able to figure out, let me know. We'll be happy to.
No, but in your guess estimate, sir, what could be the size of the market, and we would be getting our trading margins, or how is that arranged?
Let me say it slightly differently. This has a meaningful impact on our India business in terms of profitability, both sales and profitability. But in a overall perspective, it is obviously not that significant.
Right.
So on a global P&L basis, it is not material, but certainly for our India operations, it is fairly significant.
Okay, so would that also maybe in future entail that we can get into some kind of a manufacturing arrangement for them or something, or no, this is purely distribution?
This is purely a sales and distribution arrangement for India. Having said that, we are already engaged with them on the API side of business, and that will always continue to kind of expand as part of our regular business strategy.
Right. Okay. Right, I will get back in the queue for more questions. Thank you.
Thank you.
Thank you. The next question is from the line of Sameer Palod from AUM Fund Advisors. Please go ahead.
Hi Manish, thanks for the opportunity and a great set of numbers. My question pertains to the US geography, where if I look at your R&D slide, you talked about a lot of filings that you are likely to do in the US market over the next few years, as well as on the API side. So since you're already present in Europe and LATAM in a big way, but US is, I guess, is baby steps. So if you can just explain the US strategy and the size of the market and when you expect to crack into that market.
So, Sameer, I'll of course, this requires a much larger conversation, which we can do offline at some point of time. But broadly speaking, I'll split this into two. The API side of business, wherein we are already in US and selling, as we speak, already between 3 to 4 molecules of ours are already commercialized, and this will only expand as we go forward. However, coming to the formulation side of business, we are at least 18 months away from our first commercialization in US, having filed the first product in the last quarter. That was in March 2020, which is when we filed our first product. So we are at least 18 months away from our first commercialization. We do not foresee US to really appear in terms of our formulation business till end of FY22. And the meaningful contribution will only start from FY23. If you need more clarity on this, we can get into a separate conversation offline because it requires a much detailed conversation.
Okay, so it's not an immediate FY22 or 23 sort of initiative. It's just building up the pipeline at the moment.
Yeah, because there is a regulatory approval timeline. So anything that we have filed today will take minimum 18 months for approval. And that's how we are building up the pipeline. But the journey has been started. And in the meantime, obviously, the commercialization of those in-house developed products in other geographies, including in Europe, will keep driving our formulation business. So we are still confident of a double-digit formulation growth in the medium term.
Okay. And my second question is with respect to margin. How do you see, you've got almost a 300 basis point increase in margin on a YOY basis. Given your mix, how do you see, and you also mentioned that emerging markets are going to bounce back. So how do you see the margin profile for the rest of the year and maybe for FY22 as well in your business?
Yeah. So again, I'll take a step back here, and as we have been alluding in our previous con calls, we have been targeting a mid-teens growth in revenue and about a 200 bps margin improvement year on year in the medium term. Largely speaking, we stay in line on delivering those objectives. Having said that, the current year is a bit unique and it is very challenging to predict what will happen. And as I've been always mentioning, we will take one quarter at a time in the current year because we do not know how really the lockdowns and the localized spurts will play out across the globe. So after first quarter, certainly we are far more confident for the rest of the year. But having said that, I would really kind of reserve my comments for the current year and we'll take quarter by quarter as we go along. But the long-term directional goals continue to be intact.
Sorry, just as a follow-on to that, Manish, so are you, like we are seeing in a lot of other, on the pharma side, in animal health, are you seeing a very robust pricing environment, given what's going on with China and with this pandemic, both on the formulation and the API side, are you seeing price increases or the margins are increasing as a result of some mix or efficiencies that you've brought to the table, or it's a combination of all of this?
Yeah. So our margins are headed in the right direction, purely coming out of scale as we scale up in every geography or every of our initiatives. Animal health business is a very commercial industry, unlike human pharma. So we do not see any price changes happening in animal health because the price of protein is not changing for the end consumer. Okay, so to that extent, the dynamic of animal health business is very different from human pharma. Again, we can take this up. Again, we can take this up in a slightly one-on-one conversation because this requires a lot of understanding of the business, and we are happy to invest that time. Just for the sake of other questions, because others will be waiting. So Samir will take it offline if you wish.
Sure. Thank you. All the best.
Thank you.
Thank you. The next question is on the line of Dasharath Mishra from Sage One Investment Advisors. Please go ahead.
Hi, good morning, Manish. Just a quick question. On the U.S. acquisitions, do we have anything in the pipeline? Are we looking at any opportunities emerge right now?
So difficult question at this point of time, especially where we are awaiting a conclusion of a change of control. So in a way, obviously we have to reset partly our thinking in terms of way ahead with once the new ownership is in place. So all I can say is there is nothing in the pipeline in the short run, but once the change of promoters takes place or change of shareholding takes place, that's when we will probably get into an engagement with the new promoters and look at the world probably a little differently.
Okay, got it. And I know that we also mentioned something about maybe entering the Chinese market, and how I wanted to focus on that as well. So is that something that would also happen once the change of ownership has fully transpired?
That's correct.
I'm just waiting on that as well. Oh,
yeah.
Thanks.
Thanks.
Thank you. We'll move on to the next question. That is from the line of Vishal Manchanda from Nirmal Bang. Please go ahead.
Thanks for the opportunity and congratulations on a good performance. Sir, on the US, can you guide us how the distribution is? Is it like we see in human pharma, or is it more complex in case of animal health products?
Vishal, what I'll do is, because this again is a slightly detailed question beyond the quarter performance, we can again take it offline, and I'm happy to even organize a call of yours with our US head of business, who will be able to give you a better color around it.
Okay, sir. Okay. Sir, the another one is on this Zoetis transaction. So one, how was this distribution happening prior to you taking over the distribution rights?
Yeah. So there was another company, Boehringer Ingelheim was distributing these products in India till recently, and that's what is getting transitioned to us now.
And sir, are these kind of unique products which kind of would have lower competition than other animal health products? Like probably like for an albendazole, we would have many suppliers, is what I would understand. So would these be kind of what what would create that pull for these products basically?
Yeah. So as I alluded to, this includes portfolio of certain vintage brands, which are very important and relevant in animal health, as also some of their innovative products, which means there is no competition for those products. So both the range of products is part of this portfolio, and that kind of creates a strong pull for these products.
Okay. And sir, would you need to incrementally invest in terms of the field force to promote this, or this would only you would be leveraging your existing field force?
Yeah. So more or less we are leveraging our existing field force. The only thing we have done is we historically had not started operations in Karnataka and Kerala, which is what we have started as part of this arrangement, because obviously with the portfolio, complete portfolio between what Zoetis brings in and also our own portfolio, the operations in Karnataka and Kerala now becomes viable for us.
Okay. And sir, just one more. Is the injectable approval in Europe on track? So basically, are there any additional queries or that can potentially delay the approval? Or
yes. There are no surprises thus far. It seems to be on track and is following the regular timelines as mandated by the DCP application process.
Okay, sir. Okay. Thanks. That's all from my side.
Yeah. Thank you, Vishal.
Thank you.
I hear a customer. Consumer. Sorry. A dog was barking. So.
The next question is from the line of Sachin Kasera from Swan Investment. Please go ahead.
Yeah, good morning, sir, and congrats for a good set of numbers. So my first question was on the gross margin. So despite the share of developed market being higher this quarter, when I compare the gross margin vis-a-vis the March quarter, there is a small decline. So would you just like to comment on that?
Yeah, the tougher questions I'll pass on to Tushar. So Tushar, if you can.
Yeah, so the gross margin actually is lower compared to Q4, but is in line with Q1. In this current quarter, we have had higher contribution from our European and Brazilian subsidiaries, where the gross margins are generally on a lower side. And that's the reason why you see this exchange.
Okay. Secondly, sir, if you could update us on our strategy of buying out minority stakes in some of the JVs or subsidiaries. So any thoughts or any progress on that? How are we looking to go? Because now we are very comfortable in terms of the cash flows. So are you looking at any of those opportunities?
Yeah, I think this is something we will align with the new shareholders, and probably based on their thought process, we can see some clarity on this in the rest of the year.
Sure. And one lastly, sir, on the US, we have been mentioning about building up front end there, and maybe thinking whether organically, inorganically. So any progress on that front? How are we thinking? Are we now more or less decided that we are going inorganic, or are we still evaluating the options?
Yeah. So I'll again split this into two parts. On our own, we were thinking of setting up our own organization, and to that extent, we had already hired a US head of business last year. Having said that, this is one area wherein we do foresee Carlyle making a contribution, and their thinking will certainly impact our strategy, especially on the acquisition front. So give us a couple of weeks or a couple of months before we can clearly give an answer on this. But surely, I expect our US strategy to be little more aggressive than what we had envisaged earlier.
Okay. And then this last question regarding the other expenses. So we have seen a lot of operating leverage coming this quarter. So I would believe part of that would be the cost reduction initiative done by the company and operating leverage. But is it that some part of the expense could not be incurred because of the lockdown and that will normalize from Q2? Or this is like a new run rate that we are looking for?
Yeah, again, difficult one, so I'll pass it to Tushar.
Yeah, so on the OPEX front, you see some reduction that has happened. 50% of this is on account of, is is related to field and travel expenses because our field people and all have not been traveling, and that is the reason why it is you see a reduction there. And 50% is towards certain reduction in our outsourced cost, that is conversion cost, which we outsource, since we got that in-house. So that is what is the impact on OpEx. But also important to note is that you see some increase in the employee cost side, which is, we spent almost about 1 crore on additional expenses on employee costs related to incentives that were given for employees during this pandemic time, and also certain additional welfare expenses that we incurred on them. So both these things are contributing to the movement in that OpEx.
So I think at a broad level, roughly 50% of these OpEx reduction will scale back once the field operations start, and 50% is there for good because whatever we have brought in internally will stay for good, and also there would be a kind of normalization of employee costs going forward. So all in all, I don't think we have tackled the cost side very drastically. In fact, we want the environment to survive, and that's why you'll see in my commentary also I've been maintaining that we have operated our business very responsibly. Only if our vendors survive can we survive in the long run. So we have been making their payments. We have not been harsh with them. And we have been, in a way, proven right at the end because we see similar behavior from our own customers.
That's very nice answer. Congrats and again, once again, all the best for the European launch. Thank you.
Yeah. Thank you.
Thank you. The next question is from the line of Rahul Veera from Abacus Asset Manager. Please go ahead.
Hi, sir. Just wanted to understand, in terms of our manufacturing facilities, what will be the top 3 manufacturing facilities for us, contributing maximum?
So on API side, we have 2 major facilities. The real major big one is the Vizag facility, and then we have Mahad, which will constitute almost between the API business 90% of our revenue. Tarapur is more of an intermediate facility. And coming on the formulation side, our 2 major facilities would be, actually there are not 2, there would be 3 because Spain is for Europe, and then we have Turkey facility for Turkey, as well as Brazilian facility for Brazil. So it's fairly evenly spread out. In that sense, we are not dependent on single facility.
Okay. And so due to a few COVID cases on the Mahad facility, do you see some revenue loss on that end of the business, sir? 15 days or 20 days of quarantine is required for the facility. I mean, thank you for understanding.
Yeah. So I will have Sharath respond to it from how we are dealing with it and what all actions we have taken. But from a revenue perspective, we do not see any impact because we have that kind of headroom available per se in terms of production capacity. But Sharath, if you can explain.
So at Mahad, we have over 400 employees and about 50 plus of them who tested positive, largely asymptomatic cases. So out of that, already as we speak today, about 45 have already been released from the quarantine site. Right? So they are all doing well. But rest of them who are negative, they have, as a part of abundant precaution, we have discontinued the production temporarily and disinfected everything. But within the next couple of days, all of them who are negative will turn back for the work. And in the meantime, we have all processed everything which is in WIP, and the show continues. That way.
Sure. Fair point, sir. Thank you so much.
Thank you, Rahul.
Thank you. The next question is from the line of Anmol Ganju from JM Financial. Please go ahead.
Yeah, hi. Thanks, Manish, for taking my question. Most of the questions have been answered, especially the tough ones. So I have an easy question for you, Manish. You alluded to the absence of data which characterizes our business. This typically also throws up arbitrages or short-term opportunities in the market? Given where our filings are, how would you kind of, characterize that landscape and market opportunity in the current times? And are there any possibilities of a positive surprise emanating from that in the quarters to come?
Yeah. So, see, ours is a kind of a dull and drab industry, unfortunately, with very few big opportunities. And everything in our business is branded generics, which means that there are no short-term surprises that can typically happen in this industry. That was both ways, because there are no short-term positive surprises and also any short-term negative surprises as well, because it's slow and steady and consistent business. So personally, I do not see any of those surprises emerging in our business, as well as also for the industry, as I see it at this point of time, both from a positive angle or a negative angle.
Okay. Thank you. That's it from my side.
Thank you, Anmol.
Thank you. The next question is from the line of Tushar Manudhane from Motilal Oswal. Please go ahead. Tushar, your line is in the talk mode. Please go ahead. Tushar Manudhane, your line is in the talk mode. Please go ahead.
Let's take another question then.
Sir, do you want to ask a question?
Just go ahead. Next question. If the line is unmuted, please.
Thank you. We'll move on to the next question. That is on the line of Bipul Shah from RW Equity. Please go ahead.
Congrats on the fantastic numbers. Just one question, which I believe was partly answered, but also in the letter of offer, we've mentioned that we are actually looking at buying out our Turkish partners, which is also visible in the minority interest contribution to the total PAT doubling from the March quarter. So any thoughts on that, and how soon can we expect to have our desired outcome of having total control over the Turkish subsidiary?
So this is also part of as part of our agreement in Turkey. There was a put option at the end of 5 years, so it is all in line with that. We are making good progress on that conversation, and again, probably within the current year, we should be in a position. The current year means I'm talking about current calendar year itself. We should be in a position to finalize that arrangement.
So, I mean, in general, sir, it's very difficult to model, it's because of, I understand the volatility also of the currency, but as on a steady state basis, what is the total contribution of say, a minority interest to our total PAT, which we can sort of factor in?
So I think you should look at the annualized number rather than any quarter-on-quarter number, because of the seasonality or different aspects of business coming out in each quarter. So if you look at the annualized number of last year, that will give you a very good perspective. Tushar, you want to add?
Yeah, it is around 15% that we look at the annualized number for FY20 as the minority interest contribution.
Oh, okay. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Ashish Thavkar from Motilal Oswal. Please go ahead.
Yeah, thanks for the opportunity. Manish, this entire concept of the government, where they are trying to promote bulk drug manufacturing, would we be a party to it, and any plans on that, if you can share?
First let me respond at a industry level, and then we'll respond at a Sequent level. But this is first time I'm seeing government moving decisively and proactively in terms of the initiative that they are taking. And this seems to be a real serious exercise, I must admit, at this point of time, that unlike in the past wherein you do some tinkering and all that. This time we see some clear incentives and some clear direction in the medium to long-term perspective. Having said that, the focus of these new initiative is towards antibiotics and towards dependence on the human pharma drugs. So we clearly are not participating in that area at this point of time, and right now we do not see any impact of this on our business strategies.
Okay. Okay, thanks. That's helpful. And for our injectable Europe business, so how are we placed in terms of sourcing of our raw materials, in terms of establishing that linkage with the supply chain? So if you could just broadly 1 or 2 minutes, if you could highlight, help us understand this.
So we are fairly well placed as far as our supply chain is concerned. And material supplies were a bit uncertain for some point of time, but everything is now more or less back to normal across the world.
And Manish, would the plans also be to monetize similar products in US?
That's correct. You're talking of the formulation development, right?
Yeah.
Our formulation development is global, with most of those products also going to be eventually commercialized in US.
Okay. Just one last question before I get into the queue. So you said, in the veterinary side of the business, the pricing typically remains constant. So in terms of, margin expansion, as you said in your opening commentary, you do anticipate some margin expansion going ahead. So if you could help us understand how those margin expansion would come up?
So our margin expansion is obviously coming out of scale benefits, both on the API side as well as formulation side. So as on the API front, obviously all our investments have been made at the site, and the operating cost of the sites remains same, even as we expand our business, especially in US and Europe, which are better priced markets. And similarly, on the formulation side of business, once you establish a field force, your fixed costs are already there. So as your revenues grow, the impact on margins is far superior in this industry compared to other industries.
Okay, great. And in terms of our capacities, how are we placed? Are we done with the capex that we need at least for the next 3 to 4 years, or we are about to expand?
So again, this is something I alluded to in my opening comment, that we have started expansion at Vizag, which will entail an investment of about 50 crores over 18 months, and this will facilitate our growth. We are obviously fully invested for the current year, but it will start helping our growth from FY22 and beyond. Similarly, on the formulation side, a major investment, which is about 3 million euros, is envisaged for our facility in Germany to have a 4x expansion there. But that is a project which we have deferred to sometime early next year, simply because of the uncertain environment, and getting a project team in this environment is not so easy, especially in Europe.
Okay, fair enough. Thanks, Manish.
Thank you.
Thank you. The next question is from the line of Sajal Kapoor from Unseen Risk Advisors. Please go ahead.
Hi, thanks for the opportunity. Am I audible?
Yes, Sajal.
Yeah. Hi, Manish. Congratulations on a fantastic set of numbers in such difficult times. So just a couple of questions. First one is on our new line of business which we have initiated recently, the CDMO I'm talking about. What sort of capability is attracting our potential partners and customers for that line of business? And secondly, do we intend to serve the innovators only, or we don't care who the customer is as long as we have the capability and the economics are favorable for us?
Yeah. So Sajal, as we talk of, we are focusing on CDMO only on API side of business. Okay, and that too also only for veterinary customers. So ours is a very narrow focus, simply because of the expertise we have, and we really want to be one-stop solution to the big veterinary companies, which are not too many. There are only 4 or so as we speak, and we want to be their kind of one-stop solution for all their API needs, including CDMO arrangements. This is a new skill set that we are developing. So technically we are capable, but it's all about project management and how do we interact with these customers. So you don't see too many of these biotech or new startups in the animal health space. So our focus will be largely towards these 3 or 4 customers and in catering to their API development needs. Sharath, if you want to add.
I think that's good enough.
Yeah.
Okay, so just to follow up on that, Manish, where do we expect competition, if any, to come from? Because clearly ours is a pure play animal pharma, and not any other player has got the US FDA approved facility. So do we expect no competition at this point in time, especially from any other Indian player?
No, I don't think anything in the world can be with no competition in the space we are in, but we are certainly fairly well placed because obviously the attention which we give to these customers is very different from the typical human pharma companies. Also, you have to bear in mind that increasingly regulators are seeking segregation of animal health production from human health, which again kind of puts us in a good shape because eventually CDMO also has a MO part, the manufacturing part. So given that we have dedicated veterinary API facilities, so I would say we are very well placed, but it's not a huge area that we are getting into.
Sure. And second question is on our VMF filing. So on 6 of those, we are the sole filer. So an example could be the rovincoxib, which we filed last year. Any feedback from the regulator or the sort of timeline for approval, and whether it's because it's come in rovincoxib is injectable as well as a tablet. I mean, what sort of launch timeline are we guiding for?
Yeah.
Thank you.
So the API launch is dependent on the formulation, and the API file in US is never reviewed till the formulation is filed and formulation is up for nearing commercialization or reviewed in that sense. So all these filings which we are referred to are at various stages of customer approvals. Okay, and will be commercialized as and when either the patent expires and or the customer gets an approval.
Sure, Manish. And if I could just squeeze in one question, last one with your
Sorry
permission.
to interrupt. Mr. Kapoor, may we request that you return to the question queue for a follow-up?
Sure, no problem.
Thank you. We'll move on to the next question. That is on the line of Mithul Soni from GEC Investments. Please go ahead.
Yeah, hello Manish ji, good morning. Good numbers. Just 1 or 2 questions. Did we have any loss of business because of COVID during the quarter, the early months?
It depends on how you want to see, call it a loss of business. Obviously, the performance was lower in certain aspects of business, especially India formulations, because nobody could travel, even supplies could not be made. So there are obviously difficulties in conducting business. There have been some lost sales in that context, but very difficult to quantify. And that's why for us, it's part of life.
Fair. And second part is that because how are we seeing increased inquiries for our API products? Are we seeing more inquiries from the customers across who wants to join hands for the API? Are we seeing any sort of that?
Yeah. So I'll again respond it in 2 buckets. Certainly in Q1, there was, and this is first I'm referring from an immediate business perspective. As we were nervous, even customers were nervous, and we could see some kind of element of differing of purchase decisions at their end. So it was not a normal quarter in that sense, even for us. Even on the API side, though we did display or ended up with a 21% growth. Having said that, from a long-term perspective, I think there is a clear move towards sourcing or kind of sourcing from other than China. And we clearly see a long-term move. This is not going to happen in a hurry, simply because of the regulatory process that we have to follow. But I see a strong positive momentum for next 3 to 5 years.
Next 3 to 5 years. Yeah. And one last question on our Europe and Turkey subsidiaries. We are seeing the strong constant currency growth. How much of that growth was the growth would be value driven in the sense price increase, or it is all primarily volume driven? And how much we can take as a future? Like, can we still continue to see about mid-teen growth there?
So Turkey certainly will grow mid-teens in the medium term. Europe touching double digit is always a good thing to achieve. And the way I look at it is roughly a third of the growth comes out of value or price increases, and the rest 2/3 comes out of volume.
Rest 2/3 comes out. Perfect. Perfect. Thank you very much.
Thank you.
Thank you. The next question is from the line of Vishal Mora from MK Ventures. Please go ahead.
Thank you for the opportunity, and congratulations on an excellent set of numbers. Sir, my questions on CDMO were answered, though I have some questions on the Zoetis transaction. I'll just bunch them into a single question. Just want to understand what was the reason for this business being transferred to us from Boehringer, and what was the size of this business for Zoetis in India? I'm assuming the profitability would be good because these are sort of exclusive products. But what is the size and why was it transferred? And whether this opens up a possibility for you to do it in other geographies as well, with Zoetis or even some of the other innovators?
Yeah. So the first part of the question is slightly difficult for me to answer, and partly maybe better for Zoetis to respond on why they transferred. But having said that, I've been eyeing this business, I would say, for last 5 years. So in some sense, it has happened for us at the right time in that context. Zoetis has been using another partner for distribution in the past, and they have transitioned it to us. It is also kind of reflection of now we are 5 and 6 years old in the business, so there is an enormous acceptability around aloe vera, even in India. The size of the business, again, I covered broadly in the first 9 months of the current year. We expect between 25 to 30 crores of revenues coming out of this business. And of course, profitability is something I would stay away. That's too confidential and internal. But clearly it is meaningful business or meaningful arrangement for both the parties. And finally, can it be expanded to other regions? Time will tell. Obviously, the intent would be to do something beyond India as well.
Right, sir. Thank you so much. And on CDMO, just one thing. Are we looking at, say, over the next 2-3 years, CDMO being relevant enough and big enough that we may have dedicated capacities for it? Or do we need feel that the CapEx may be accelerated because of the CDMO initiatives?
Well, difficult to answer this because we are very, very new. We are still understanding this business, especially and opportunity within the animal health space. We are very clear that we don't want to venture on the human side of business. So at this point of time, I would stay away from commenting on this. It is not built in our business plan. Let me be candid. But maybe in next 6 to 12 months, we'll be able to give you a better color around it.
Thank you, sir. Thank you so much.
Thank you. Thanks.
Thank you. The next question is from the line of Akash Jain from Money Curve Investments. Please go ahead.
Hi, Manish. Just one question for my broad level understanding. So, see, there are a lot of parts to our business, right? There is an API business, and within formulation, there is a LATAM business, a Europe business, and India business. If you want to get our arms around the margin profiles and how the margin of the company is going to improve, can we get some qualitative understanding of how the interplay of margins are between these businesses? API and within formulation, our emerging markets / India, Turkey, Europe and Latam? Just to get a sense of where we are, where is most of the operating leverage going to come from, and how does this interplay work on an overall basis for the company? Thanks.
Very big question, I would say, though it is.
So that's why I said qualitative is good. Yeah. I don't want quantitative. Qualitative is good enough. Thank you.
So, see, broadly speaking, the strength of our business model is having multiple growth engines, and that is what has worked well for us, because always you will see that certain things are firing for a quarter and you may be faced with some challenging environment in certain parts of business. At a broad level, certainly the margins, gross margins are higher in Turkey, which we have been alluding to in the past. Fundamentally, all injectable businesses have higher margins compared to the oral businesses. So our European business, as also our Brazil business, is more orals, while our Turkish business and also our emerging market business is more injectables. So that would probably give you an indication of margins. The moment there is a faster growth in markets like Europe and or in Brazil, there would be slight change in our gross margins, though it is not very, very significant. Similarly, on our API side of business, our API margins are not very different from the collective margins of the formulation business. So again, all in all, you will see very narrow shift in our margins across quarters and across years. The benefit we are deriving is really the scale-up benefits as we drive our business going forward. So our investments are already there in place, and as the business ramps up, our while revenues may ramp up by 15-odd%, the impact of that on the margin side is obviously slightly more disproportionate, given that most of our costs are fixed.
And just a follow-up question, Manish, if I may ask. On API, obviously scale leads to a lot of operating leverage. And on formulations business, given that it is all branded generics, typically the productivity or whatever we call the revenue per salesperson is a big driver for improvement in margins. Am I reading it right in terms of how you expect scale-up of margins to happen?
Absolutely bang on.
Thanks, Manish. Thanks.
Thank you, Akash.
Thank you. The next question is from the line of Saket Bansal from Opulent Investment. Please go ahead.
So my question is regarding the API business. Last quarter we mentioned there was a deferred sales of 8 crores rupees, right? So this quarter we would have got that sales. So is it correct to understand like that?
Yeah, we did get back that sale has been booked in this quarter, but there is also an element of deferred sales even for this quarter, because obviously logistics.
What would be that quantum?
About 4 crores.
About 4 crores. Okay. And so you spoke about the margin just now, like there are different countries have different set of margins. I wanted to understand what is the utilization level in all the plants? Like, is it at 80-90% or what is it?
See, in pharma, you can never go 80-90%. Typically, once you hit or once you envisage you are hitting about 80%, you have to start planning expansion. So
what would be the current state?
So our current capacities are certainly adequate for this year and also part of next year. And as I alluded or spoke earlier, we are already working on expansion at Vizag and at Germany.
Mm-hmm.
Yeah.
Okay. And sir, can you throw some color on injectable business? Like, what is the size and what is the target size of the market? How big this opportunity is?
Very difficult question, Saket. I don't have a ready-made answer, but having said that, we are happy to engage on a more one-on-one basis and give you a better color, because the answer is going to be very long.
Just one more question. Out of this regulated, see, we have 75%, 85%, 75% of the API business is in regulated market and 65% of formulation is in regulated market now. And in earlier calls, we have mentioned as we move more into the regulated market, more the margins can be improved, right?
That's correct. especially on the API side.
So how much room is still available, or
See, again, I'll respond at a broader level. The fact that we are alluding to a 200 bips margin improvement year on year over a medium term and not for the year alone is all coming out of those quality of business parameters that we have been talking about.
Okay. Thank you, sir. Sir, once in Turkey business, how is it like? What is the growth rate we are expecting?
So Turkey, we are expecting mid-teens growth rate in the foreseeable future.
Okay.
I mean, it cannot be every quarter and all. There will be some volatility across quarters, but on a directional level, we are talking of mid-teens growth.
Okay. There was some because this quarter was a growth of only 4%. That is why I'm asking.
No, but on a constant currency, it is 11%.
Okay.
That's why we are very upfront in giving every growth in every geography on a constant currency basis, because there is an element of volatility of currency.
Correct. Thank you.
Thank you,
sir.
Thank you. Ladies and gentlemen, we'll be taking the last two questions. The next question is from the line of G. Vivek from GS Investments. Please go ahead.
Yeah, so congratulations on yet another consistent quarter. I'm surprised at times how come you are so consistent, and if you can elaborate on that part also. Plus, what is the value add being done by our partner Carlyle, which is expected, and what experience do they have in the animal healthcare sector? And second question is about our domestic dogs and other things. They are almost becoming like a part of family world over, with the people going in for a Western lifestyle and no pets, and the pets are having the important place. So how positive is it for us, and the opportunity side, if you can tell for us? Thank you.
Yeah. So, as I understand, your first question was around Carlyle and their experience in this industry. So, from whatever we know, while Carlyle has great experience in the global healthcare space and it is one of their preferred areas of investments, they have no direct exposure, or this will be their first investment in animal health space. They have in the past been associated with animal feed businesses, but not something directly in animal health space. And the idea is, how do we create a far more global organization in the animal health space? Is the fundamental thesis of their investment. At a broad level, they have given us 3 or 4 areas of value creation that they will be focused on. One is US, second is China, and third is vaccines. Having said that, given that they are not as yet part of the promoters, we have not yet interacted and created a new, or we have not interacted to the extent that will happen over the next couple of months once they are part of the promoter group. The second part of the question was pertaining to the Indian companion animal business. That clearly is a growing segment in India, as dogs and not so much cats in India, but dogs are becoming part of families. As we speak, we are not there in that business in a meaningful way, though we have 1 or 2 products. That is again an area which we will look at as we move forward. One thing you have to bear in mind is animal health is very, very complex in that context, because there are too many species you need to deal with. So we really pick and choose what we want to play. And in that context, while companion animal in India is growing and important, but so far we didn't see an opportunity for us to make a dent in this industry. But that can change going forward.
That is true for world over, no? Not only for India, companion animals, and especially in the West.
That is correct. But if you follow our strategy, we have stayed away from companion animal business across the globe. And that is simply because that's an area of big focus of the big daddies. And there is a lot of dollars and money that goes in that part of business. So we are very conscious of the way we leverage our capital, and we want to, therefore, we have chosen to opt for or chosen to focus on the ruminant or the production side of business.
Okay, sir. And can you just highlight the differentiator for us, which has been able to give us so consistent performance over the last so many quarters? And I believe your leadership has played a key role in it. And keep up the good work, sir. But just for the record's sake and for the new investors like us, the differentiator will be really helpful, sir.
No. So I think I would just say we are lucky. That's more than anything else. First is the industry is that way very dull and drab industry. It's a slow and steady industry wherein being branded generic, you can't gain something very quickly, and also you can't lose something very quickly. So that's the positive of this industry. Having said that, I think at our end, we are a very strong execution team. And that's what has made the difference. So it's not about me, it's about the entire management team who have come together. We are a very professionally run organization in that context, with promoter not being part of the team in a way, not even at the board level. So it has been great responsibility on the management team. And so far, we have been so execution focused that to some extent, we have been able to deliver consistently, partly coming, as I said, from the industry nature and also partly coming out of the management team.
Keep up the good work, sir. Thank you very much.
Yeah. Thank you, Vivek.
Thank you. The next question is from the line of Manoj Shah from Lax Glow Investments. Please go ahead.
Yeah, good morning. Part of my question has been answered. But just wanted to, if you can clarify on the growth part of it, how with the Carlyle coming in, where do you see the company over the next 2-3 years in terms of the revenues or the newer market penetrations? Margins, as you have said, that will grow by 200 bps YOY for next 2 years, and all the new product launches.
Yeah. So I think how Carlyle impacts our business strategy, you please give us about 2 quarters before we can respond to it, because the transaction is yet to close. So we still haven't really got a chance to interact with them and redesign the strategy. So give us time till end of the year before we can come out with how the things will look, if at all any different from what we have been alluding to. But on our own, we stay confident on the medium-term direction of the company, which we have been always kind of communicating.
So, as of now, your plans are top line to grow in what range?
We have been alluding towards a mid-teens growth rate in revenues and 150 to 200 bps margin improvement year on year in the medium term. This year is an exception, of course, not that we know anything about this year. Everyone is nervous about the current year. Things are only evolving. So for the current year, we are looking at 1 quarter at a time. That's the way we have been speaking about.
Okay. Thank you. All the best to you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for their closing comments.
Yeah, thank you. Thanks for joining us on the call. The key points that I would like to leave behind today are, it has been a strong quarter under a very challenging environment, and both our segments, APIs and formulations, have done well in the environment. Emerging market growth was tepid in the quarter, but we expect the numbers to stack up in the second half of the year, partly driven by the multi-year deal with Zoetis to market and distribute their ruminant portfolio in India. We are expanding at YZ, while the expansion at Bremer has been deferred. The Carlyle transaction is on track and will close in this quarter. And finally, in the last quarter, I had mentioned that we shall take 1 quarter at a time this year, given the environment. While I still maintain the same, I do believe that our performance in Q1 does provide us the impetus to look at both Q2 as well as the rest of the year with greater confidence. Thank you, ladies and gentlemen. Thanks for joining us so early in the morning.
Thank you.